Good morning, everyone. Hope your evening went well. It's it was nice here in Wichita yesterday. About 70. Didn't get up there as high as I thought I was going to get, but that's okay. Today we're in the 70s. No moisture in the forecast. The low 70s or high 60s. We're back to more seasonal temperatures, but we do need moisture for the hard red winter. Texas, Oklahoma, Kansas, and southeastern Colorado, Nebraska, and the rest of the states look pretty good as far as moisture goes. Okay, today there's a lot hitting the market. The biggest impact this week is going to be FOMC. That announcement comes tomorrow. They're in a two-day meeting. Interest rates are expected to be left unchanged, and the taper will be over. No outright or overt support of the markets by monthly Treasury and mortgage-backed security purchases. The seasonal, the normal for stock markets is to rally into the FOMC and then rally on the announcement. Things are expected to be unchanged. My guess is we're seeing that rally start today in equity. We have durable orders this morning, a big number. Plus 0.9. That's a huge number, but it does swing because of the transportation, transportation. Plus 0.5. Well, that's going to be the number one focus. Then we have Case Shiller. I don't think anybody will pay any attention to it. Plus 0.1. Consumer confidence, they will look at 86.8. Going to be the number two focus as far as news goes. Richmond Fed plus 10. It will be taken into account, but it doesn't really influence the markets. Then the two-year auction. So I think what we're going to have in the morning, right off the bat, and a lot of times we see this, they run it down into the opening of the day session. And then the market starts to come back. So we're in that rundown right now. Then we've got news. And it's forecast to be favorable for equities, not so for financial. And then we've got the two-year auction. So I think we'll see this market bought on weakness. So our first buy is 25 to 29. It's pretty aggressive. Like to get it done at the low end of it, and our second buy is going to be 17 to 21. Okay, the first little band of resistance really is right here at 127, and the spill came at 127.02. We've got volume at 4, and I think that's where the attractor is, so we'll put our fund. Frankly, it may take 31s to get in on early in the session. But we do have news on the half hour, and then 11 to 15. And that's it for the... Okay, the knob spread's kind of holding in there, but gradually decreasing as players book some profits. It got awfully high, got up to 16. We're back in the 1424 area, give or take a little. So there have been some nice profits taken. And again, on the bond, running it down in front of the AM news quite often, period, or sets the low when they run it down in front of the market, but we'll have to see. So the first buy is going to be 13 to 9, pretty aggressive given the strength of this morning's news, and then 1 to 5. So this buying against 141, I think, offers us a real opportunity given the two-year auction this week. The spill came from 26, so 23, 27, sell 1, and then our 31 to 03 for sell 2. Gold was really very quiet last night. We did get down just below 25 in the overnight session. We basically we're buying the 21 to 25 area. Could pay upwards of 27. So here we find ourselves at 2760. The news, if as forecast, would be a negative for gold, so we'll make 23.25 buy 1 and 18 to 20 for buy 2. I still think gold is moving lower longer term. Our sell last night was at 33 to 35. 32 is the high, so we'll make 29.31 sell 1, then 34.36 for sell. Trying to pick this up over here and then pick this area up. Early this morning, gold's pretty quiet. The focus of the market, because we don't have large institutions in there banging away on the long side, it's drifted to other contracts, notably crude. So crude actually offers us more opportunity these days than gold does. That was not the case a while back. Gold was a little bit more volatile. Okay, we were hoping to buy against 80, just below it yesterday. Every time they make a new low, the market tends to snap back. We talked about how our 82 to 82.50 was prime sell territory. I think that probably remains the case. So our buys last night in crude, we were hoping to get it done at 80.50 to 80.75. And the low was 40, so it did fill. And our sell last night was 81.75 to 82. I'm going to leave that the same, although it looks like we're going to trade a little bit higher than 2.25, 250. So our crude numbers were spot on last night. The extension's up from 81.16, so we'll make it 80.75, 81 for buy 1, and back to our 25 to 50 for buy 2. We did a pretty good job with the levels in crude last night. Okay, lots of articles out overnight as to whether the actual securities that the EU's purchasing will solve their problems or not. Some news out on the Ukraine on how the Western world, notably Germany, would have to pick up Ukraine's natural gas bill. It's really amazing. It's almost when you think of it's almost like a criminal activity out there these days, and it is the mindset of Russia. They'll come in, they'll rough somebody up, they'll steal something from you, then they make the West pay, really, in a sense, it's a ransom to make them behave until, well, or better until the next time pops up. I mean, they know how to shake the West's money, for sure. Yesterday, we wanted to sell 20s to 30s in the euro. And the high is 23. That looks reasonable. Maybe 15s to 25s this morning. Or 40 to 50 if they break it out. At 40 to 50 is just kind of a backstop. We've got a B. We've got volume low, so I think we are headed lower. So we're going to make 75. Let them get stops. 80 by 1. in our 50 to 60 buy too. The news, if as forecast this morning for our markets, should take the euro lower because our economy would be deemed more robust and than the Europe's. And they're talking about now 0.3% growth for Europe for next year. 0.3%. I mean, that's so close to recession that it would be hard to. I mean, it'd be hard not to get into a recession given what's going on with those kind of forecasts. But you know, when things are really, really good, they talk about growth in Europe of 1.5%. So they don't hit the higher numbers like the U.S. economy can for a quarter or two. And the reason for that is overregulation, social welfare. You can't fire people once somebody's hired. It's almost for life. Brussels has the EU so wrapped up that it's really hard for them to breathe, and so you really can't get the growth out of them. You can out of the United States and other areas of the world that aren't not as restrictive. The United States is moving as quickly as they can to the European model, but we're not quite there yet. Okay, we've got all this volume up at 75, 77, and 75 is the next round number. The issue is, can we get through 70 or not? We've rallied in anticipation of good news this morning. And the tendency is for this market to rally starting the day before the FOMC announcement and to continue that rally after the announcement. So I think the buy side is a better trade for us. So we're once again put into this dilemma of having to pay up to get long early. So the 65 area plus or minus 1 is where we may have to go to get off along this morning. 60, 62 would be more comfortable. And then definitely 55, 57. So I think the market's bias today is to the upside. It is pointed higher if the news is as forecast. It should go higher. Then we're going to be looking to really to sell failure in the 75 to 81, 75 to 80 area. That's where I see resistance. Now, having said that, if this news comes in lower than forecast, we're going to be sorry short on the news announcement. It's just kind of that. So, know the news, you got the first trade of the day for sure. And probably there's enough liquidity to sell stop and buy stop into the market. It's not like unemployment. There will be players here. You'll get skidded, slipped, but it won't be like it is on unemployment. Okay, take at least 20 minutes to get everything up and running. I'm going to get busy on that right now. I'll be back as soon as possible.